My guest today is called the Valuation Guru, and for a reason. I'm speaking to someone who dominates timelines for anyone who's interested in understanding the philosophy of investment. Aswath Damodaran, thank you so much for speaking to us here at NDTV.
Thank you for having me.
Absolute pleasure to speak with you at a time when everyone in the world, in some way or the other, is trying to figure out what exactly is going on. You wake up to news cycles where everything is all over the place.
I mean, it is a seismic shift. It's a shift from a world that has existed for almost 80 years, right? The post-Second World War world is shifting, and it's been shifting for a while. I think we attribute too much of this to Donald Trump. It's a shift that's been happening since 2008. What held the world together was this global economic order has been under stress. And I think this year you're starting to see that stress play out as actual breaks in the model. I'm not sure what replaces it, but it's a time of uncertainty because you don't know what's coming because everything we do is structured in what we already know. For that, we look back at the last century.
Yeah, since you've jumped straight to the big T,
Yeah.
let's dive into it. Over the last couple of days and recently, actually, Trump has posted about India and Russia going into the dark embrace of China. May they all prosper, etc. From an Indian perspective, in the last few months, we've gone from a situation where we thought that a tariff deal would be a shoo-in.
Yeah.
Definitely will be the first to get there, to a situation where it's become rather bleak. How have you seen that whole wave?
Well, I've watched Donald Trump now through his first presidential for the 4 years and now. And I think the word I would use to describe him is absolutely unpredictable. Right? Normally, you can look at a person's history and look at their mindset and say, this is what they're probably going to do. And I think, Donald Trump, it's almost impossible to figure out what that next step is. I mean, he will tell you that is his art of the deal because he's negotiating with people who are so uncertain about what he's going to do next. He gets better deals for himself. He does keep people off balance. I would not want to be negotiating with Donald Trump because I have no idea where he's coming from the next minute. So I think what you're seeing, though, is what he used to do in real estate play out on the global face, right? And real estate was another real estate person who probably felt the brunt of this uncertainty. Now you have, leaders of nations feeling the effects of somebody who's completely unpredictable.
You excel at analyzing companies, valuations, stocks. If Trump were a stock, where do you think this is going?
I would say he would, it's a high risk stock. It's an extremely volatile stock. It's a stock where it's a Tesla on a global stage because Elon Musk has many of the same things, right? 2 days ago, I was listening to Elon say that Tesla is really a robotics company. And I said, really? I thought it was an electric car company. But in a sense, he's been able to carry investors with him because he has enough people who seem to say, okay, you're a robotics company. Trump, in a sense, does that on a national stage. He has a group of people who essentially say, okay, that's where you're going. I'll go with you. So if he were a stock, he's a stock with a very strong following. It's like a very loyal customer base, but I have no idea where he's going. He's going to take them wherever he wants to take them, and that's going to be incredibly unpredictable.
So a high-risk stock like Tesla. I love this.
High-risk stock where I don't know what business you're in. You keep changing your mind. Today you're a retail company. Tomorrow you're a manufacturing company because you're effectively whatever you woke up that morning and said you were going to be.
Yeah. So I love this. So I'm going to press on this a little more. If Xi Jinping were a stock, because we're going to talk about Trump and then the Rick of BRICS.
Right, yeah.
So if Xi Jinping were a stock,
he'd be a very predictable stock in many ways, except if you did things that really get in his way as a company. I mean, I have a sense that he's pretty ruthless about the end game and he will play that end game. And I think that if he were a stock, would be more predictable than Trump. But if you got on his wrong side, God help you, right? He has his own shadows that come with it. I mean, I remember in 2019, we thought the big Chinese tech companies were going to coast, right? Because of the government as their ally. And then one day Beijing called in, Tencent and Alibaba, and said, you guys are too big. And he managed to cut the knees out from the big tech companies because they went from being allies to adversaries essentially overnight. So if he were a stock, if I were on the right side, I'm worrying about, will I end up on the other side? Will I be like Tencent in 2019? So I wouldn't be sleeping on my job because I'd worry about that shift coming. So it's predictable for the most part, unless you're doing something that's not in his larger mission. And if you're doing something that doesn't fit in, you're probably in danger.
So any sort of parallel you can draw with a company?
Kind of company. When I value Amazon, the analogy I draw is the story I tell is it's the Thanos company. I'm an Avengers fan, and Amazon is like Thanos. It's going to get you, the click of the fingers. For me, that's what comes to mind when I think of China collectively and the leadership there. This is a very, 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 they have a mission and they're going to get there, and nothing is going to get in their way.
Wow. What about Mr. Putin?
That's an interesting one. Russia doesn't have the power it used to have once, except for its military. But Putin is a survivor, right? He's clearly in Russia. The way you get to the top and stay to the top requires that you cut down your enemies early on. So if he were a stock, who would he be? Maybe some kind of a Chinese martial arts. I'd say he's very good at kind of keeping his enemies close and knocking them down. So, in many ways, he's easier to read because he doesn't hide behind, behind things that make you look polite. Like China, I think, puts out this, we care about the rest of the world. And I think Russia is very clear. We care about Russia. We're going to do whatever we can, even if the rest of the world disagrees. So, a tough one call.
And of course, what about Modi?
It's interesting. He's the lead seller of the India story, and he's done a pretty good job of selling the India story.
So any stock in mind?
The stock in mind, it would have to be a growth story. So it'd have to be Palantir, maybe, so you're selling a growth story. The story has heft, but lots of things have to, so it's still early in the game. So unlike the Amazons of the world where the story's been told, if it were a company, it'd be a growth company. Potential is out there, but lots of other things have to happen for that potential to be delivered in terms of numbers.
Super segue actually to how you've looked at Indian markets, and overvalued has been the very, very short pointer of it. I think you said that earlier in this year. After that, things have been range bound. There's some things India has done. Do you still...
I hope you're not blaming me for it being range bound.
No, I think that goes to Trump and this. I think you'll have to come back in line. You're very well revered, Aswath, but I don't
think so. I don't think I can move markets.
I don't think you can move markets.
That statement about overvalued was just a statement of fact. It was because I computed the PE ratios for everyone I do it as part of, at the start of every year. I just I call it, playing Moneyball with the data. I take the data and say, let's see what the data is telling us. And I compute the PE ratio for every country collectively. And India had the highest PE ratio of any country of any magnitude. There are some small countries, but this was a country, a large enough market with. So I said, look, it is the most overvalued market. And of course, it got in the news. And then I got a little bit of backlash saying, what.
No, there's no backlash.
I don't know.
My question is that, do you think we're still there? The Indian markets are still as overvalued? Or even more so?
I think they are still overvalued because now you've added a layer of uncertainty you didn't have when I made that statement of a 50% tariff and working your way to what the end game is going to be. So I think they're overvalued, but there's, I think, a reason for that. I think part of the reason the Indian market is overvalued is FOMO. A lot of institutional investors need to be in the next big market, right? Whatever the price is. And their fear is if you're not in the Indian market, you're going to get left behind. So like AI, you need to be in NVIDIA if you're a portfolio manager, or your clients are going to ask, why aren't you in NVIDIA? So a lot of US institutional investors, their clients are saying, hey, what's your India position? They've had a China position because they played that game already. And for many of them, their India position is either non-existent or really small. So that is a big driver. The other is Indians themselves have enough wealth to invest, and really you push them into investing mostly in the Indian market because it's tough to invest outside India. Not impossible. When I was growing up in India, you could not invest outside India. Now you can, but with guardrails and restrictions on what you can do. So the country is getting wealthier. The wealth has no place to go but into Indian stocks. It's almost given that Indian equities are going to get pushed up too much relative to other equities, because that wealth is driving it up. So a combination of FOMO on the part of foreign institutional investors and domestic investors having more money to invest has pushed this market up, not just over the last year, but if you take it over the last 15 or 20 years and you look at the upward motion, it is the driving up with those two forces pushing it up. Now, but that also means that if it's overvalued, there is no catalyst that can cause an immediate correction. It's not like people are going to wake up. Especially domestic investors. Let's say they said Indian stocks are overvalued. What exactly is the choice? What are you going to do? You're going to buy Indian real estate, which is even more overvalued in many. So there is no easy place for them to put their money where they can say, I can do better.
Having said that, for foreign investors, there seems to be a lot of concern because you have FI investment at a 13-month low. Some of it because of tariffs, etc. Do you see that shifting or reversing because of this FOMO factor?
Foreign institutional investors are the biggest sheep on the face of the earth. You have 2 good weeks in the Indian market. They'll be here really quickly. So I'd love to tell you that they're deep thinkers, that they're going through this process. They're chasing returns. So the only reason they're reluctant now is the returns haven't been good in the last few weeks. You have 6 weeks of good returns, everything will change. And that's the nature of foreign institutional investing. It moves in, the entire group moves together. That's mood and momentum driving it. And right now, the mood and momentum might be a little down, but it's not out. And if that shifts, they'll shift with it.
You know, we have limited time in this interview, so I want to spend a bulk of it talking about what would be useful for the young Indian investor. A lot of investors right now, retail investors in India, have started their journey in COVID or post-COVID. And they really haven't seen a rocky time, so to speak. A bulk of them, really. There's been an explosion. What would you advise them when they're looking right now and they're hearing, okay, India growth story 10, 15 years, but they're seeing their portfolios shaky?
I'm going to make a statement about investing that people might not like. Investing is about growing and preserving and growing wealth. It's not about getting rich. And unfortunately, I think somewhere along the way, especially with younger investors, and this is not just in India, but across the world, there is this sense of investing is about a way of getting rich quickly. So when you do that, it changes the way you think about investing. Basically, you're looking for long odds. You want to get that 10 bagger or 100 bagger because that's how you get rich. It's a terrible way to invest because you're searching for the next big one, and there are lots of good investments under you ignore because they're never going to be 10 baggers. So my first advice to young investors is make up your mind. Do you want to invest or do you want to trade? Trading, if you want to get rich, you buy at a low price, you sell at a high price, you chase momentum. That's entirely fine. If you're truly wanting to build an investing long-term record, you got to start by saying, okay, what do I have to invest? How much risk can I take? And then think about doing things incrementally. Build up your investment portfolio so you can preserve and grow that wealth, which means if you have a job, do really well at that job because that's where you get the income to save. So if you're a doctor, don't spend all day checking out the stock pages. Be a doctor, be an engineer, because without that income coming in, you're not building wealth.
Are you saying that investing is not a profession that people should pursue?
It shouldn't be a profession if you have another job, right? If you work for a portfolio manager, it's your profession. But most people who are investing in the market have other jobs on the side, and they tend to invest as part of what they do in the evening or the lunch break. And if you're doing that, that's fine. But take care of what's creating the income that you're then investing to preserve and grow.
So then how do you pick? Right now, there is a primary market boom in India. Everyone has lined up for an IPO, and some very small companies, some very large companies. It's a complete a deluge.
Yeah.
How do you pick?
Do you know that 80% of mutual funds in India underperform the index in India?
Yeah.
Which actually is it's a good place to start, because if you're investing and you want to invest and grow, for most people, the most sensible way to invest and grow is to pick an index fund that has almost no loads, no transactions costs, fees of 0.1% or whatever you're investing, and then go back to living the rest of your life. Think of how much time you save not looking up the next stock, the next IPO. And when you're 85, you can look at your neighbor who's been doing all of those things. And my guess is you'll have more money in your portfolio than your neighbor does.
Having said that, there are people who genuinely enjoy looking at companies, looking at valuation.
That's different. If you enjoy investing, be very clear about why you're investing. You enjoy the process. In fact, today in class, I said, look, I am an active investor. I pick stocks, but I don't expect to be rewarded for doing the right thing. I said, look, if I get to the age of 85 on my deathbed, and my best friend or my worst enemy came to my deathbed and said, look, I've looked at your record over the last 60 years, doing your intrinsic valuation and picking stocks, and you made 9%. But if you'd taken that money and put in an index fund, you'd have made 10% a year. The question I asked my class was, would you be okay if you learned that in your deathbed, that all of the work you were putting, doing your research and picking stocks, you could have avoided and made more by just putting your money in an index fund? And I told him my answer is I'd be okay with that. I'd be okay with it because I truly enjoy the process of picking stocks. And I follow a very simple rule in investing. And this is a rule that I would also pass on to young investors. The rule in investing is do no harm. Don't do things in investing that can cause catastrophic losses. How will that happen? You take all your money and buy that one stock that everybody says, I don't care how great the hype is. You are putting yourself at risk of losing 30% of your portfolio, 40% of your portfolio. Those are the kinds of mistakes you cannot come back from. So, make up your mind on what you're going to do. Do no harm, and less is more. Less activity over more activity. The more you trade, the worse your odds are of making good returns.
For a lot of companies right now in India, which are great stories, the word is still out on whether it's hype or the next big story, right? Famously,
it doesn't have to be either or, right? It can be both. You can have hype and it can be a real story. The reason hype is so difficult to separate from the story is often hype is based on something real. Let's take AI, right? Is there a lot of hype about AI? Yes. But that hype is built on some very real changes that AI is bringing to businesses and markets. Most hype that sells is often because you take something which at its core is true and then you overdo it, right? So to me, it's not a question of is it hype or is it real? It's real, but the problem is the real part has been exaggerated because you focused in on an aspect of the reality and ignored some of the stuff you should be factoring in, right? So I think that it's, a lot of hype at its core. There is a core story that is a good story, which is one reason. Hype companies are not bad companies. They can be great companies. They're just priced too high given what they can deliver.
Let me complete my question, which was specifically about, I think you spoke about Zomato when it listed. Look at what's happened with it now. And there are other companies listed. There are others making a beeline in the same space.
What do they call it? Quick commerce?
Quick commerce is what you could call it, or food delivery. They've increased platform fees incessantly with the knowledge and in the comfort of the knowledge that now the demand is inelastic. People are too used to ordering online. Would you revisit that idea? Do you think that there's a lot of hype built in internet-based companies or platform companies?
I think that when I first valued Zomato, I valued it as a restaurant delivery company, right? Which constrains the market. And it's true, right? If I were telling the Zomato story now, it's a bigger story. It's a story of, especially after the Blinkit acquisition, it's really a company that will deliver just about anything to you at home. It's your restaurant meal, your grocery, your maybe even a retail item that you bought. And it's taking advantage of something that is a very real problem in India. Yesterday, I had to go from here to the Regis Hotel to give a talk at 7 o'clock. It took me an hour and 17 minutes to get from here to the Regis Hotel. I mean, we're the infrastructure constraints in the big cities especially mean that, you really cannot get from point A to point B very. So if you get home after a long day and you forgot to pick up your laundry, you can get in your car and drive to the laundry to pick it up, but it's that 10-minute errand will become an hour and a half. India is perfect as a perfect target for a company that says, we will do it for you, because they're arbitraging the fact that your time is worth more to you than some other person who can do that for you at a lower cost. So they have that advantage for them, which is, I think, driving the demand in the market. I think the thing that people might not be factoring in is Zomato, when it was delivering restaurant meals, kept 22% of what you were paying. If they deliver groceries, there is zero chance of being able to keep 22% because a grocer's operating margins are like 6, 8, 10%. It's a low margin, high growth business. And what I wonder whether investors are factoring in, they're excited about the growth you get from going into delivering all this neat stuff. But are they factoring in the coming down of margins that's almost inevitable when you leave these spaces where you can claim 20% of what's paid to places where you might be paid 2 or 3 or 4%?
Do you think that there are more stories like that? Is there anything right now where you see a great story which is not yet tapped in the Indian equity context?
I think the places to look are in healthcare, because I think Indian healthcare is essentially a market we're going to see huge growth, because as people get discretionary. I mean, I grew up in India where there were people who never went to a doctor in their lifetime because they couldn't afford to go to a doctor. Hospitals, you had to drive around the city to find the hospitals. I was in Chennai, 5 days ago, and you drive down Punamalai High Road, there are 16 hospitals and MRI centers. Clearly, people, as they have discretionary income, are able to spend more money on health. And we know how that plays out. In the US, 20% of the GDP is in healthcare, because as you get more prosperous and you get older, both of those will play out. So I think healthcare spending in India is going to go up. It's almost, the question is who's going to benefit from it, right? And the companies that are out there are trying, the hospitals, you have the health insurance companies that are starting to show up. That ecosystem is going to start to see more players. And I'd be very interested in India specific. But right now what we're seeing is players that replicate what you see in the Western markets, right? The insurance companies, the MRI, the diagnostics. But there's probably a version of a healthcare company that is tailored to India, which is going to be very different than the healthcare company you would create for a market like the US. 1 billion, 3 people spread out across a country where income is widely variable. There might be a healthcare model that actually is able to tap into that very different market. I haven't seen one, at least one that is public yet, but I've talked to people who have private healthcare businesses who are tapping into, hey, we're trying to build a healthcare company that's more attuned to Indian healthcare rather than try to replicate what you see in US healthcare. So I'm keeping my eyes open for one of those companies, because I think if you can find that space, that's potentially a 10-bagger, a company that could really do well.
Do you think the GST cuts that have taken place are going to be the game changer for Indian market economy?
Step, right? Because I looked at, when you look at those numbers, you need some rationalization in this policy. There's too much, there are too many variants across different kinds of transactions. So it's not just the lowering, it's more of a standardization where somebody doing business faces more certainty on that dimension than they've done for the last few years, because it was too much, too much uncertainty. But what exactly will that look like by the time I make my end product?
In terms of AI, and this, I think I want to ask this question in 2 aspects. One is, of course, that big Indian AI story. Do you think it's going to come? Is that something you're looking out for? Or do you think we're too far behind where the NVIDIAs of the world have taken a leap?
The AI architecture business is, I think, it's too far gone, right? It's too late to become a chip company to make AI chips. You could try to be the manufacturing hub for a company like NVIDIA, but to try to make the chips yourself and catch up with it, the money's already being spent. You don't have enough of a lead time. But that's the architecture. The AI architecture, though, is being spent because you expect AI products and services to come out of the space that people pay money for. Right now, I can't think of a single company making money on AI products and services
Globally.
globally, right? Because they talk about it. Almost everything I have has some AI play on it, right? And I'm Zoom, there's this little AI button. I'm not even sure what it does. When I have email on Apple, they have an app. But my reaction to all of this AI stuff that I'm seeing is it's neat, but I'm not paying $10 a month or $5 a month for it. And for many of the consumer directed AI products, I'm not sure there's enough of a market. There'll be lots of people using AI, but there's not a lot of revenue there because I'm not sure how much I think there is play in the B2B AI market. And I think it'll take work. It'll take work to bring together the combination of computing power and data. The company that I think is closest to monetizing it is a company like Palantir, right? It's got the computing power, it's got the data, it's got the clients who need that combination. So I think right now people are investing in the AI architecture, expecting the AI product and service market to be huge. 4 trillion. That's the only way you can justify investing $500 billion in the architecture. And I think that product and service market is still wide open. We don't know who the winners and losers are. So if I were India looking at the AI space, I'm looking at that end of the AI space, not the architecture. Building more data centers is not how you make money. It's the products and services that come from AI.
Thank you so much, Aswath, for speaking with us. It's been an absolute pleasure.
Thank you.
Thank you.